Listen, in 2024, the median saving for a 60-year-old retiree is $210,000. I'm not sure about you, but this seems quite low or even scary with the increasing rise of inflation. Let me know in the comments your age and how much money you have for saving or not. In this video, I give you the cheat code to know if your saving will allow you a comfortable lifestyle in retirement. This cheat code is the single most important factor for retirement readiness. The cheat code is coming up later in the video, but let's just have a discussion. Let me ask you this question just to get started. If you plan to spend $70,000 annually in retirement, what would be the lump sum amount of money needed to fund your entire retirement over the next 30 years? Okay, in terms of if you were saving during your accumulation period, what is that total amount in your 401k or IRA that you would need to fund your lifestyle over the next 30 years? That's the question. There is mass confusion about the desire to have $1 million as your retirement goal benchmark, to the point where many people are planning for retirement are like lowballing themselves going into the most crucial phase of their life. The consequences of lowballing your retirement will cause all sorts of problems. This is like, okay, I need $1 million for retirement, but actually you don't. You may need a little bit more or a little bit less. This is an important target to plan for, and you gotta be accurate. In this video, I'll give you a simple way to calculate your projected lifestyle funding needs. Speaking of lowballing your retirement, here are some examples of getting it wrong and coming up short with your funding and saving goals for retirement. You may not have enough saved up to maintain your desired lifestyle during retirement. This could result in financial stress and potentially having to make significant lifestyle adjustments. There is nothing worse than having to cut back on life enjoyment and activities that make you happy in retirement. If your retirement savings are low or underfunded, you may become more reliant on Social Security benefits, which might not be there in the next 10 years or be drastically reduced and not able to cover your expenses in retirement. With lower savings, you have less capital to invest, which can limit growth potential of your investment over time. You might need to work longer than planned to make up for those shortfalls in your retirement savings, which could impact your health, your well-being, and quality of life. That means less time from family activity and getting around visiting those grandkids. Low saving may also force you to take more risks in your investments to try to catch up. As you and I both know, there's no opportunity to catch up in short-term investment. Those are always risky, potentially exposing you to greater market risk and losses. Last but not least, inadequate saving may also leave you vulnerable to unexpected healthcare expenses during retirement, especially as health costs tend to increase as we age. So setting an arbitrary $1 million saving goal for retirement may not be suitable for everyone due to various factors. Everyone's lifestyle is not the same. $1 million may be too high for a conservative Mark, but too low for boat cruising Bob. While I enjoy live football, boxing event, you may just like bird watching or nature hiking or vice versa. And it's okay. What I'm saying here, you just have to make sure that you know your number. Know how much money you need to maintain a smooth lifestyle after you retire. This is where the cheat code come in, which I will reveal later. Lifestyle variation is a huge factor in retirement planning. Factors such as housing preferences, travel aspiration, healthcare needs, and hobbies all influence how much money is needed in retirement. How do you know what you need in retirement? Simple. A retiree wants the same lifestyle they had right before retirement. Sure, you may do more traveling, but you most likely will not wake up and decide you want to upsize your house or move to another state with your family or make any major financial decision day number one into retirement. You want to live the same lifestyle as you did before. That is what we typically see. You now know when someone say they need $1 million or planning to have $1 million in retirement, it's an arbitrary number if it's not based on their lifestyle and how much they project that they would need over the next 30 years while in retirement. If they get this wrong, this could potentially leave them destitute and poor if their retirement is underfunded. The common ratio, which is not the cheat code, which I would discuss in a moment, the common ratio is 80% of your salary you need to take into retirement. For instance, if you are making $70,000 before retirement, you should plan to have a spending goal of $56,000 annually into retirement. That is what you call your retirement replacement salary. Now that you know that $56,000 is your replacement salary and will fund your entire retirement over the next 30 years, you may say to yourself, what is the lump sum amount needed to fund this lifestyle in retirement? i.e., how much money would I have to save up and accumulate to ensure that it pays me $56,000 annually for the next 30 years? This is where the cheat code comes in. And here's the math. It is the replacement salary of $56,000 divided by 0.04, which is just another way of applying the traditional 4% rule. This will also frame your saving goal into a lump sum figure, which is $56,000 divided by 0.04. This equals $1.6 million needed to sustain a salary of $56,000 throughout your retirement. Keep in mind, $1.6 million is a lot of money going into retirement. If someone have like a pension, a social security, rental income, or other type of income, this substantially reduces the need to have saved $1.6 million just to fund $56,000 annually for the next 30 years. As you now learn, the 0.04 was really the cheat code. It just applies the 4% rule to your projected replacement salary for retirement. This would allow you to arrive at the lump sum figure that you anticipate needing for the next 30 years over your entire retirement. This is definitely not just picking $1 million or some arbitrary number out the sky and saying that you want to shoot for that target and the next 30 years, everything will be all right. 9 times out of 10, inflation will erode that type of a calculation. So apply the 4% rule to your replacement salary, and how you get at the replacement salary, you just take 80% of what you anticipate making in your final working year, and that's a good amount to call your replacement salary going into retirement, because it kind of smooths out your lifestyle before and after retirement, and you divide that by 0.04. I hope this information was educational and or that it helps solidify the path that you're on with your retirement savings. Don't forget to subscribe by clicking below. I'm still under 100 subscribers, but I'm growing. Thank you for your viewership, and I look forward to putting out more videos.